halftime report. Well, it's turning out to be a session where it is quite subdued, and what stands out most in terms of the statistic is the advance decline ratio. So that is currently at 770 stocks advancing to around 1250 stocks declining, and that ratio really hasn't improved through the trading session, as you can see on your screen. Some news coming in on Gateway Distriparks approving or raising over 600 crores via debt. But let's get in some technical calls now. We have Ashwini Gujral and Prakash Gaba joining in on the show. Afternoon, gentlemen. Well, Ashwini, let's start with you. What are you strategizing 12:30 p.m. today?
See, what is significant is that the market on the large cap lacks momentum on the downside, which means that, supports need to be bought. In that sense, 10,680, 700, which was the morning level, that is holding on. Plus, what I can see right now is PSU banks and NBFCs are moving up. So whenever financials are doing well, it becomes difficult for the market to fall substantially. So still, buying on Bank Nifty is viable. And the sense appears to be that global markets probably are near some sort of a bottom, and sooner or later, as that happens, we seem to be in a correction of an uptrend. So chances are we are likely going to outperform on the upside. And once that happens, generally mid caps also tend to come back. So just you can say a strong bout of correction in mid caps. Having said that, L&T Finance is a buy with a stop of 150, target of 158. Mahindra & Mahindra is a buy with a stop of 784, target of 810. And Muthoot Finance is a buy with a stop of 490, target of 515.
Okay, that's all buys and all NBFCs. Okay, Ashwini, do stay on. Prakash is also with us. Good afternoon, Prakash. What are you trading?
Trading, I have two stocks, both on the short side, because to me, market looks like it might hold here, and maybe we could see some kind of short covering in the later part of the day. But to me, some stocks still look weak, so I'll go for those. NBC, Hero Motors is a stock that looks weak, has seen more of an exhaustion pattern on the upper regions. Possibly we could see a slide to around 3,070 zones, stop about 3,300, should be fine. So it's possible we'll see 3,300. Second stock that looks weak again to me is NBCC. Here too, I feel it got exhausted in the upper regions. Possible we could see a level closer to 52 zones, stop about 56.
Ashwini, wanted to get you in on these auto stocks actually. It's turning out to be a weak session. Bajaj Auto, Hero Moto obviously is topping the list. Low point of the day for that stock. Eicher is down 1.6%.
See, basically autos, other than an odd Mahindra & Mahindra, maybe it's because of tractors, etc., are basically looking weak. Particularly Hero Moto, it's fallen sharply from the 200-day moving average. Maruti again kind of holding pattern, nothing much going on. After 3-4 years of good runs, when these guys are cutting production, etc., longer term this is the buying zone. But in the short run they'll have trouble because bad news just started coming out.
Okay, what about IT stocks? Ashwini, today I can understand Infosys being a little excited. But as a category, IT stocks have done well. In the top 5 gainers on the Nifty, 4 are IT.
See, IT index was at 16,200, 25th of September. Then it's made a low of 13,600, 800, again getting close to those levels. So possibly IT is planning to now stand against the market, and if global markets bounce back, probably IT will do better than everything else. So that way, IT is much further in its corrective cycle than other stocks. So I think IT somewhere is trying to bottom out.
Okay. Prakash, any view on DLF? Stock is down 4%.
Well, it's down, no doubt about it, but I don't think there's much downside here because there is a support in the vicinity of 175. So I would like to short here, but would I buy here? Of course not. I need to see strength. So far, I don't see any strength on DLF.
Okay. Any disclosures, Prakash?
No, none of the stocks discussed today on the show.
Okay. Ashwini, do you want to disclose anything?
See, we have Bank Nifty long options plus individual stocks which are on the long side.
All right. So long positions in the market. Thank you very much, Ashwini and Prakash, for being with us. We'll, of course, touch base with you repeatedly. on the hour. The markets have actually receded a bit from their very, very red hue. I mean, there's a lot of correction, and that could be attributed to the fact that S&P futures, when we last checked, were in the green. So still red, but not as much as it was. There's some bit of a troughing out at this point in time. As Ashwini pointed out, at 10,700, his band was 10,680 to 700, but at even north of 10,700, the markets have repeatedly found support today. So with that in view, let's get you some fundamental market opinion. Earlier this morning, we spoke with Arvind of Geosphere Capital Management, and he said that India is in a sweet spot currently. He says that cyclical forces are coming in to play in favor of the India growth story.
We're looking to put money to work. We're not making big macro calls, but we see now the global headwinds. Our central call on a global basis is not for a global recession, although the risks have grown. We have to be careful that we can never say never, but we think that Indian companies that benefit from a global supply chain, there are some companies that are already seeing demand for that, from people diversifying out of China. There are companies that would benefit from that. We see that interesting, and we see some of the domestic, more rural-oriented demand stories benefiting from the spending, and the NBFCs, as the liquidity conditions ease, you could see some opportunities. What's happening in terms of the populist measures, it looks like, loan waivers is the mood of the moment. Yeah. Again, I wish there were more strategic thinking, because, the only way that you're going to get farm incomes better is by moving a significant portion of the rural population into urban jobs and industry. In the meantime, all you can do is give palliatives like, minimum support price higher, and you can do farm loan waivers and what have you. So, yes, we will take advantage of that in terms of equities that will benefit from that. But from a long-term structural standpoint for India, it does nothing. It doesn't solve the fundamental problem of farm productivity. The cyclical forces are finally coming into play. The GST digestion is behind us. That, you don't get the easy comparisons from the GST implementation, but you get the more kind of normalization of the economy benefits. You get the lower oil prices. I think India is seeing what we're seeing globally, which is inflation is completely dead, and in India it's extremely low from historical standpoints. I think India is sitting in a sweet spot, again, assuming the world is not going into a recession, but is going into a slowdown, and China's slowdown and global trade slowdown are not headwinds for India.
Well, that's important. K. Subramanian, that's Krishnamurthy Subramanian, has taken charge as the Chief Economic Advisor. Remember, he's a finance graduate from Chicago Booth School, a student of Rajan and one of his colleagues. At the moment, he's in the faculty of Indian School of Business, was a member of the PJ Nayak Committee on PSU bank reform. So on banking reform generally. So takes charge as the Chief Economic Advisor today. Actually, not a day to lose, because there'll be some kind of a budget being passed. It will be more like a vote on account, because the government will have to come back to power to be able to spend that money. We don't know what will be the color of the government that comes back, but importantly, he will have to very quickly make an economic survey, a macroeconomic report on the state of the economy before that budget kicks off. We shouldn't expect fireworks now, because there's hardly any time. So I guess Subramanian's biggest economic survey will be the year after. My sense is he's sufficiently an academic. So irrespective of the color of the next government, we should expect Krishnamurthy Subramanian to continue as the Chief Economic Advisor, because his choice is entirely academic. I don't think there is any political affiliation of any kind. Our CEAs have normally been academics beyond the pale of any political leanings. So I think we will get his better report, or more thorough report, in the subsequent year. For the FY20 budget. For FY19, I think we will have just a rough and ready economic survey backdrop.
But I think he has a corporate background as well. I think he's worked with the likes of JP Morgan in New York and all of that.
He has an investment banking ground as well.
Background.
But basically comes to us as an academic and has expertise in banking. You know, normally we've had macroeconomists as chief economic advisors.
But his role would be more academic in nature in any case.
Yes, the chief economic advisor is strictly that. He's an advisor. He doesn't make policy. So to that extent, yes. We have to take a break on that note. We are coming back with our grand year-end wrap-ups. We're going to be wrapping up the retail sector for you. Mangalam Malu will be with us. Yes, this is that time of the year, last week of the year, and this is the time when we look back and check out how certain sectors have done. And today we've chosen the retail sector. Actually, when the history of Indian modern trade is written, 2018 may well be remembered as the year when this channel breached the double-digit mark in contributing to FMCG sales. Now, this observation comes from the expert Mangalam Malu. He is here to tell us why 2018 was the year for modern trade.
Absolutely. 2018 was the year when the modern trade contribution to FMCG sales crossed 10%, the double-digit mark. Now, while a 10% share pales in comparison to Asian peers like Indonesia, China, Thailand, as well as Malaysia and Philippines, it's the recent pace of growth and the imminent promise that has all the stakeholders excited. In fact, in just the past 2 years, growth in sales through modern trade has increased substantially and even outpaced traditional channels. This is because of demonetization and GST, which were important policy factors that contributed to the recent growth of modern trade, which in most times has outpaced traditional channels as well. Here are some factors that are important and the important trends over the last 2 years. The first one, the number of stores in modern trade universe format. That itself has witnessed a double-digit growth on a CAGR basis. Nearly 1,300, 1,400 stores added just in last year. The street has taken the note of the same, and the retail company stock prices from the start of 2017 have zoomed manifold. Secondly, the consumer preference. That itself has witnessed a slight tilt towards modern trade. People are buying more year on year, and not only that, they're buying more than ever on big days like Diwali, Independence Day and Republic Day. Not only are the customers buying more offline, they're also buying more kinds of products online that they used to buy offline earlier. Another trend that has become increasingly clear in 2018 is that while the popularity of e-commerce is growing, offline sales, they haven't dropped. The market is converging both ends of the spectrum and have understood that their meeting place is somewhere in the middle at click and mortar, which is what led to a lot of deals. There are two kinds of retailers in the world today. One who say, Amazon's looking to buy me, my business is doomed. The others who say, what? Amazon's not buying me? My business is doomed. Yes, from Whole Foods to Shoppers Stop and Aditya Birla's more, Amazon has gone offline shopping like no other. And perhaps there could be more. Talking about deals, Walmart's 16 billion acquisition of Flipkart was the biggest deal in the e-com retail space ever. Again, a boost of confidence to Indian modern trade. So as 2018 draws to a close, the big data points to watch out for in 2019 will be 1, increasing store additions by the incumbents and new players. Secondly, more products on offer as FMCG companies ramp up their innovation pipeline. Thirdly, another listed player perhaps on our bourses, Spencer's that is. And fourthly, as media reports indicate, another deal perhaps, the Amazon future deal in the retail space. But the big question remains, will regulations with regards to foreign ownership in multi-brand retail ease or not? But for the listed stocks, ones which have zoomed, the valuations are at all-time high. The earnings expectations are higher given the potential of modern trade. So let's see how 2019 turns out.
Okay, all right, Mangalam. Extremely interesting link there in terms of wrapping up what exactly retail looked like in 2018. But on that note, let's get in what Lalit Agrawal, the CMD of V-Mart Retail, had to say on the outlook for 2019.
We are expecting something around 5% till now, but yeah, we would be around that. But something near to that. But we expect more to come in because the marriage season this time has shifted. So normally this gets shifts. But otherwise, I think there is there, and it is going to we see it coming up in the next year, because the coming year, the first quarter itself seems to be very heavy on the marriage dates, and people are going to consume more and more. During the first 40 days of festive season, we saw almost higher double-digit growth, and which was there, and which was very motivating. I don't think we are with any talk with Amazon, and neither have they come up to us. But yes, we are looking to get into omni space, wherein we would also try to offer our consumers some bit of digital experience. But it will take some time for us to launch.
Right, so that was the expert opinion coming from the retail space. We have to take a break on that note. But up next, we're going to look at those GST rates that got slashed over the weekend. 23 items have gotten cheaper because of lower taxes. We'll get you a conversation with the Revenue Secretary Ajay Bhushan Pandey.